you know what my greatest accomplishment was? I went to the tax office, tried to pay my taxes, and 2 hours later, almost succeeded.
All my money's in a tax-free account now, and I'm withdrawing from it. So, hey, taxes are for schmucks.
I've never been more convinced that a company like Quantum Computer Inc. is going to lose the majority of its valuation.
Everybody gets overexcited, peak of inflated expectations, like money flows into this sector like water. People are backing the dumbest companies, and then boom, trough of disillusionment. And then you reach the plateau of productivity. This technology is adding value and it's really here.
I'm going to cash out. It might be 100%, 150, depending on the news that caused the spike.
There is a surge in takeout food orders, not necessarily pizza, in the vicinity of the Pentagon, CIA, and the White House before most major international crises are announced to the public.
It's not a bad thing to have in your toolkit. Learn the tool, weigh it properly, add a pizza index. Now you're in business.
For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife. Welcome to Wall Street Wildlife with Krzysztof and Luke. In this week's packed episode, the Pentagon Pizza Index. What can fast food tell us about geopolitics? Martin Shkreli on quantum computing, on where this investment theme might be going longer term. Plus, we're actually going to tell you why I sold Remitly, and Krzysztof is going to tell you why he bought some more EOSE calls.
That's what's going to happen. And in the meantime, all you visual learners out there might notice I look more like a monkey than ever before. That's because I'm back on my native soil. So I'm getting in touch with my natural self.
Are monkeys, not endemic, what's the word? Anyway, do they live in Poland? Do they come from Poland?
No, we don't have a raging monkey population besides this one.
Okay, all right. How are you enjoying the home country? Is it known as the home country?
It is my home country. It's very bizarre to be back to the place where, you have roots and happen to know the language, but everything still seems different, a little foreign. It's hard to say. Not just different and foreign, but like in Sicily, there's a certain obviously feel and a lot of, let's say, bricks and mountains, and here everything is green and giant tall trees, and you could smell, it smells different. It's just so wild. It's just different worlds. But the historical layers I could feel just personally and overall.
I was hoping to come and join you, but you forgot to invite me, and so I figured it wasn't happening. And then you messaged me a few days ago and said, when are you coming? You haven't fucking told me where, when do I need to bring a tent? What's going on?
Dear listeners, that is Badger's version. My version is slightly different. I extended an invite on the silver platter. I did not hear a reply. I trusted he was booking his tickets. He was in contact with his agent, so I reminded him.
Where to fly to? There's many airports in Poland. Just to make you aware, there are multiple airports.
Process of elimination. I don't know if we're ready for a special guest, but we're recording at the moment.
I don't care.
Okay, Mama doesn't care, so.
Hey.
Hello.
Hello. Say hello to our.
What is your beer? Listen, the best Polish beer I'm drinking. You are invited. I don't see you. You don't even tell me that you have beer in this container. You don't.
No, I don't.
Look.
Mama, this is it's mid-afternoon on a Tuesday. No, a Monday. This is water. We're drinking beer on a Monday afternoon.
Listen, right now it's morning in Poland, so come on. Okay, cheers. Bye. I'm sorry for interrupting.
All right. So now you can see the root. Yeah, the roots of the issues.
Your mama is a fearsome character. The apple fell far from the tree because your weak drinking capability when I came visiting you in Austin.
Right on. Yes. So anyway, it's been a wild ride. Hey, you know what my greatest accomplishment was? I went to the tax office and I tried to pay my taxes, and 2 hours later, I almost succeeded. And this was like in the native tongue. So if I could do that, I might, it's I was impressed with myself.
Fantastic. Very good. Well done. I'm not sure I do. Oh, let's not go there. I was going to ask you about your US tax situation, but let's not go there on the podcast.
Is it me, or does every government on the planet want a piece?
I don't know. Yeah, I've sort of escaped from the system in some ways. I live this tax-free life. I've got my own personal Dubai. I take everywhere with me because all my money's in a tax-free account now, and I'm withdrawing from it. So, hey, taxes are for schmucks.
I have much to learn from you. See, that may be the difference. The main difference between us is that what you just said. Here I am spending most of my hours in tax offices, and you are not.
just like the invitation that was not forthcoming to Poland. I plan ahead. I take actions today to make my life easier in the future. So you must do those things.
You know what's convenient is we have records on our channel. I'm going to scroll back and see just what we could present our viewership in terms of, was what I said an invitation, or was it some hocus pocus mirage that I just dreamed up?
Okay, it'll have to be next year. The logistics were not forthcoming. Anyway.
Not necessarily. I am allegedly being whisked off to northern Poland later in the week to go deep into another one of these Polish primeval forests to go bird watching for like an extended period of time. Here, I'll let you know where, I'll let you know when. You show up, put on a nice grizzly bear costume, jump out from behind a tree, and then
get my ass shot by your hunting uncles. Yeah.
How's life on your side of the pond?
It's pretty good. Not much is going on right now. I'm having a nice chilled time. My Whoop, I'm wearing a Whoop for the last month or so, and it's unlocking all sorts of insights. And I'm not sleeping well, it turns out. I thought I was sleeping great, and now it's given me all sorts of drama about my ever-increasing sleep debt. And it's trying to help me figure out behaviors that correlate with bad sleep. I didn't know I slept badly. Turns out I do. And it's I'm younger than my chronological age. My biological age is 5 years better than my chronological age, but this sleep debt is doing damage. So yeah, I'm in a bit of a worry about that. I'll figure it out.
I have a theory. You're not paying enough taxes, and that's weighing on your soul.
That's it. Yeah, I'm going to contribute. Yeah, good. I'll find a way. I'll find a way immediately to contribute to society. Well, how about we both try and contribute to our own little society by talking about something meaningful to an investor for this week? And why don't we start with something called the Pentagon Pizza Index? You heard of this?
Tell me about pizzas and indexes and what they have to do with the world blowing up outside our window.
So apparently this is relatively well known, right? It totally passed me by. But I think it's always interesting as an investor to look for things that, like correlation and causation, things that tend to happen around the same time, ideally before another thing. If there is a correlation there, then maybe you can rely on that and you can start to form judgments about what's happening in the world. And someone apparently identified that. Well, let's rewind the news and what caused it happen this time. So unfortunately, the situation in the Middle East has broken down again. Israel and Iran are back at each other's throats. And somebody noted that, the Pentagon Pizza Index. So there is a surge in takeout food orders, not necessarily pizza, in the vicinity of the Pentagon and the CIA and the White House before most major international crises are announced to the public. So you could kind of front run this a little bit, perhaps, by studying like the sort of food times in these restaurants. And you can see that like live on Google. You don't even have to be like stalking and hanging around outside the pizza joint at the time. And then another sort of similar quirk is like bars and nightclubs and places like that tend to get less busy around that time because everyone's like pulling all-nighters and they're super busy and they haven't got time to like go and blow off steam. So interesting correlation. I kind of buy. This sort of makes sense to me that this might be true. What do you reckon?
Let me ask you a follow-up question. Do you see this as a kind of one-to-one correlation, or am I missing some level of complexity?
Oh, there's probably like a ton of things that will cause a particular pizza restaurant to be more busy. Right? Maybe they just launched a promotion, or maybe there's like, you know, a band playing in town. There could be a whole bunch of reasons. It might be a COVID pandemic and no one can go to the stores. But so this is an example of something known as open source intelligence, OSINT, essentially like getting a bit of insight into the inner machinations of government, perhaps through like publicly available information. Like that guy who got shut down because he was tracking Elon Musk's jet and like, where's his private jet flying from, and then trying to infer something about like deals. And actually relevant to one of my holdings, Jonah Lupton, like a pretty famous name on X, like he's been tracking publicly and sort of posting his insights. He's been tracking flights taken by Transmedic's owned aircraft, like their aircraft network. And then from that, publicly available information, there's nothing illegal about this. And from that, he can draw some inferences around like their growth rates and sort of take up and like, you know, are hospitals increasingly using their services? So that can tell you something before you wait for like the quarterly report to come out, and you potentially could invest around that.
Yeah, I don't think it's crazy. That's one. Two, yeah, it's not only is it not crazy, but if you think about where in this age of information you could still gain some alpha, to me, this kind of sleuthing, because it's knowing where to look and it's not over leveraging on just, say, the data points that everybody uses, it seems to me like a not stupid way to gain an additional layer of perspective. Obviously, were you to make this a large portion of your investment case, you'd be ridiculous. But why not do something like this to confirm a certain trend? Second point, therefore, and this is where I know you're going to laugh at me because of what you did to me on the Patreons, but I don't think this is too far different in kind from the kinds of magicians we see that use technical analysis, as long as they don't say, right, that the price is the end all and be all, like some people do, but who use price stuff to kind of, let's say, measure sentiment. Might we not say that's a little bit of a similarity? Like you measure sentiment via pizza indexes, and you could also measure sentiment via looking at price patterns. And that as long as you're not over leveraging, it's not a bad thing to have in your toolkit.
Yeah, fair enough. Look, and what Krzysztof's referring to is a snarky comment. I posted a meme on our Patreon community when one of our patrons was asking about who uses technical trading successfully. Krzysztof believes he does, and I posted a bit of a meme about it. But you're right. Like I kind of rag on you because it's funny to do so, but you're right. There's probably something in that as part of a wider tool set.
Exactly. The stuff, we might as well talk about it just a little bit, right? The things that I think are rightly mocked are sort of what people were pointing out on our Patreon. It's the overextended belief that a certain pattern is predictive to the point where you could, make your decisions on that. I never approached it that way. It's just more like out of 20 data pieces, if that too is in favor or against favor, I weigh it. I weigh it in a certain sense, and it's not a zero. Right. So I don't know. We're not saying anything mystical here, although it's unusual, like some people do. It's what they do all day, every day, and they're playing a mechanical game, which has nothing to do with investing. It's just chart reading. There's some people that think it's complete garbage, which I think it's not a small group of people. I think there's absolutely zero merit in any of it. And I fall, I think, somewhere, I don't know if in between is the right word, but if you learn the tool, weigh it properly, add a pizza index, now you're in business.
Yeah, fair enough. And like you're going to tell us about your EOS position later in the episode. Like I know that's one where you've used some technical indicators to kind of inform when you've added. So yeah, let's pick that up when we chat about EOS.
Yeah. So sometime during the week, you sent me a half an hour, 40-minute interview with Martin Shkreli, right? Shkreli?
Yeah.
The guy that he's kind of open about it too, right? It's a little surprising. The guy that committed some sort of fraud in the biotech business. And then when you listen to him talk about himself, he's like, yeah, I was in jail. I know more than you do because I went to jail.
Yeah, quick like reminder of who he is. So yeah, Shkreli. I think he was voted as like the most punchable face of, I don't know, like one of the 20 teens. And I think he famously, he's like a pharma guy, investing guy, and he's managing like a lot of money. I don't know if it's his own money or investors' money. He famously buy up the patent on some drug and then jack the price through the roof, and then was like basically like he got lambasted in the media for essentially like monetizing people who are sick and needed these drugs. And he made some arguments as to why, this is how the model works. But, ultimately it was kind of a predatory type thing. And he became infamous for that. But like put his ethics and everything else aside, there's no argument. He is a smart dude. He understands like his niche of biotech very, very well. He's certainly an expert in that area. And he has like an almost daily Twitter feed where he like live streams and chats about positions in his portfolio. And he's recently gone beyond biotech into talking about quantum computing, because he, a bit like you and I were saying a few weeks ago, although I'm sure Shkreli was way earlier to this party than we were, he's been pointing at how quantum computing is a massive bubble, and he has a significant and increasing short position. Like I get the impression it's like hundreds of millions of dollars plus betting against most of these quantum meme stocks.
First thing is in terms of who he is, I stayed away from him. I did not listen to anything he had to say because of that most punchable face quotient. I tend to get a little, when greed is your domain, I'm like, okay, I'm just not going to mess with that. Two, during that interview, he was extremely righteous. Would you agree with that?
Yeah, well, actually, it wasn't so much an interview. It was a debate, and like a bull and a bear debate on quantum computing as an investment theme. And Shkreli was the bear, like the strong bear. And then the bull in this particular debate was a investor called Shay Balor, Stock Savvy Shay on X. It was also like a relatively big name. And I think like Shay didn't come out looking great in this interview, but I think it, like, just to sort of acknowledge, I mean, he's probably made a mistake having that particular debate, because as an investment professional who maybe understands like the high level and the theme, very hard to go into like a nuts and bolts, detailed, granular debate with someone who is a domain expert, right? You're probably setting yourself up for a tough conversation. But yes, you're right. Probably for good reasons. like Shkreli came across as a bit self-righteous in the conversation.
And here's why I raised that point. I would amend that sentence from a bit self-righteous to full-on self-righteous. He clearly has done more work in the space than his opponent, so to speak, or his debater, right? And yet, I know from my 25 years doing this that some of my biggest investing mistakes was when I had put in my 20 hours of doing like reading the tiny print, and I knew the technology better than anybody. And I was like, pounding my chest about how great this thing is and how it's going to do X, Y, and Z. And there's a fine line where you cross where you can delude yourself because of how much you know. So it's almost the opposite of the Dunner-Krug effect or whatever that's called. And I sensed it so strongly when I was listening to him that he came across as though he could not be wrong, that there was no way in which he could be wrong, even though his arguments were obviously, to my ears, quite solid. So I don't know where the truth lies. I'm guessing it's probably closer to his argument, much closer. And yet, because of the self-righteousness, I could not make the kinds of bets he's making at this moment.
Okay, so like here's where I stand on this. So we've talked about the Gartner hype cycle in the past, which is where any new technology, like quantum computing, like 3D printing decades ago, like AI, all sorts of stuff, right? Everybody gets overexcited, peak of inflated expectations, like money flows into this sector like water. People are backing the dumbest companies, and then boom, trough of disillusionment. Everybody realizes the technology is not there, and everything comes crashing down super hard. And then slowly, often you climb the slope of enlightenment, i.e., you start figuring out, okay, this is how we'll do this thing. This is how we're going to deploy this thing, monetize it, generate economic value. And then you reach the plateau of productivity, which is like truly now this technology, this thing is adding value, and it's like real, it's really here. And like, AI, right? Everyone got excited about AI multiple times, like in the last 50 years. Like it's, AI was being discussed a long time ago. It's only now that we're climbing the slope of enlightenment, and we seem that, there is real revenue to be generated and cost savings to be made. Now, where I sit on this is, I think we are on this hype cycle with quantum computing, and we are certainly at the far left of this thing where like we're near the peak of inflated expectations. Maybe we've still got like another double, triple, 10x to go, right? Who knows? But at some point the bubble's going to burst. I think we all probably agree with Shkreli on that point. But probably where Shkreli diverges, maybe from you and me, I don't want to put words in your mouth, is so the position he took in this interview, in this debate, was this technology is a science experiment. It will never, like definitive never, generate economic value and actually be something material that like beyond very niche cryptographic, scientific, like mathematical domains. And I agree with Shkreli that that's the journey over the next 5 years, let's say, because we're so far away from actually knowing how to do this stuff. But I sort of see through this to there probably will be a slope of enlightenment, that we haven't figured out how we're going to use quantum computing, but we know like there are optimization problems that we could probably apply this technology to. We don't know exactly how yet. Like this is why it's screwed right now for the next 5 years, because there are so many things we do not know that we have to discover. And it's so ridiculous. Like it's not just not knowing how to do it. It's not knowing how to use it once you've successfully done it. Like we've got to figure out what the thing is and then how to actually deploy it, how to use it, how to monetize it, generate value from it. Shkreli believes we will never figure out those things. I accept that we might, but the next 5 years is the same either way. Like this stuff is going to get body slammed hard. And the only companies that are going to be successful are going to be like the giants, like the alphabets and the folk like that, who have almost like a bottomless money pit, and they can treat it as a science experiment. They don't have to monetize it to actually do science in that domain and maybe kind of continue the investigation.
This is why it's so interesting to go back to his character. On the one hand, there's something about him that seems raw and honest. He's just going to like shoot his mouth and tell you what he thinks. So I'm like, oh yeah, I'll listen to that. But because he committed fraud in the past, I can't also feel quite comfortable, confident knowing he's not telling me something, or that he's, lying by omission or whatnot. But the part where he said, that he's sort of in the inner circle in some senses with some of the top AI minds in OpenAI and whatever, and they themselves have no position that has to do with quantum computing. Why not? Right? It's not like they're dumb. Like, why would they not be throwing significant money at this? I'm like, yeah, that makes sense. The other thing is, you're right. Exactly. This to me presents a massive paradigm shift, right? Of a technological sort. And when you start saying never, you're forgetting fundamentally what a paradigm shift means. You can't ever, just like science as a discipline cannot ever discover all the things, and we can't ever know all the incompleteness theorem and all this other fancy stuff. We have a limit to our knowledge, and his being righteous in this way is why he's right directionally. He's wrong, I think, holistically.
It remains to be seen, and probably no one's making like confident beyond 5-year predictions about this stuff. Like, you don't need to. You can, I think you can know what the next 5 years is going to bring, and you can invest accordingly. And then let's let 2 or 3 of those years play out, and then we'll take a view on where we think like years 8 to 10 are going to take us.
There was one thing he said, which was, I don't know if it was concerning, the stuff that the way it could be used for encryption because of the whole Shor's algorithm and large numbers and all that, which is directly correlated with Bitcoin security. So, I put that in my keep a watch on those developments column. But then I also think the world's best cryptographers no doubt know this too. So they're not just going to be sitting there letting some attacker just build their, mobile army while not counteracting it somehow. So all in all, I should say that I have never been more convinced that a company like Quantum Computer Inc. is going to lose the majority of its valuation, but I can't be confident as to when that will happen.
Yeah. To sort of pick up the conversation we started having 2 weeks ago, like, you had a short on what ticker QUBT, Quantum Computing Inc. And you had to close that because I think we reflected that your short was a little too short term to really see like the collapse. And I've recently bought January 2027 puts on Rigetti, ticker RGTI. And that's like 18 months. Maybe there's enough time for like the short thesis to play out.
Exactly. Yeah, that's the right way to think about it. Because to remind listeners, when fundamentals are not what the stock price is based on, you're now in the hands of the people with money who make the price go to where they need it to go to make the most profit, whether that's in your favor or not in your favor. In the quote unquote short term, something like 6 months is not enough.
I did look over the weekend. I'd like to take out some more shorts in this sector on different companies. Again, we're just like entertainment money. Like, this is not a material part of my investing strategy. I'm just kind of playing around with this stuff. But like options, long dated options anyway, on this sector are really expensive. Like, most of these stocks have to go to like a third of their current market cap over the next year to 18 months. That's like a massive haircut for these to make sense because they're just so expensive to buy these puts.
I am looking at the price of Qubit as we record in this moment, and it's actually back to it's almost at $19, which is like a $2.7 billion market cap. Before the quantum, call it bubble thing started in about call it October of last year, the share price was 70 cents. So it went from 70 cents to $19. And if our thesis is correct, it's going to go back to around 70 cents or lower. Although, so there's, right. It still needs to fall massive amount, but the put premiums, because they're expensive, even when the stock falls something like 70% from here, that's still, I think that's approaching break even. That's why I closed my original at a tiny, tiny loss, because I was right in the timing. It still wasn't enough. And then instead of falling down to the $1 level, it reversed.
Are you tempted on the back of some of this conversation? Like, we brought it back into our chit chat regularly. Are you tempted to jump back in again?
Absolutely. I did. I started doing the math again on the back of our last episode. And I held off because I'm using a little bit of that technical analysis stuff now in this moment. Another way it's kind of useful, actually. This is another one of these, because the fundamentals are not in play, so whatever the next earnings call will or won't be won't really matter, then primarily you have the charts to go by. And when there's this massive swing in which the momentum now is up, I know I need to wait, because the odds, the probability is that's going to keep going up. So I withheld, and interestingly enough, today, it's up, 12% or something? Yeah. I don't know. I've asked you this question many times. Don't you think this is a little bit like what poker players do in terms of reading the table and kind of waiting with incomplete information to sort of get more aggressive? You don't necessarily wait for a good hand. You kind of read the chart, so to speak.
Yeah, I think there's some overlaps. Yeah, it's not a perfect analogy, but there's certainly some poker discipline around, being patient rather than just like blowing your load way too quickly.
Long. This would be great. Play poker in this hat and just.
Yeah.
All right. I might actually take you up on the more we talk about this. I might open up a little basket of shorts on this industry.
Well, let us know on the Patreon exactly what you buy and what strike prices and stuff, because I'm looking at it, but I don't know much about derivatives, so I'm trying to learn. This is my like fun money entertainment, but at the same time, I'm actually trying to learn something useful.
Hey listeners, my name is Brett Schaefer, one of the hosts of the Chit Chat Stocks podcast. On our show, we do comprehensive stock research reports, interview analysts, and learn from great investors. And we have coverage on stocks like Airbnb, Nubank, Mercado Libre, and many others. Plus, we cover all the hot financial news on our weekly investing power hours. We have episodes for all types of investors, and think if you listen to this podcast, you will enjoy ours as well. Follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts, and start discovering new investments today.
Should I actually talk about the EOSE option I bought last week?
Yeah, let's do that.
Because it's a derivative, I want to try to keep this simple, because options can be incredibly complicated and overwhelming, and you start just, your eyes get cross-eyed. But I use a couple of tools. They're very basic in a sense. One is there's a way to measure standard deviation from the current price. And all that tells you, it's just pure statistics, that at a certain standard deviation, it's most likely that the price in the short term won't exceed that number, whatever the statistical probability is, like 90 whatever percent, right? I'm not a stats guy, but I know that much. So whatever price target I set that I think the stock can get to, if I want to still not be too big for my britches, I make sure that that target price is within that first standard deviation or pretty close to it. Does that make sense?
Yeah. Yes, you don't need like some like wildly improbable event for your thesis to make sense.
Correct. So when I was looking at the EOS option that I bought for King of the Jungle, this was right after the stock kind of cratered by whatever, 40%. It went from 760 down to $4.10, something like that, on the back of the financial restructuring. One, I tried to do my best to understand all that. I came to the conclusion that was actually good for the company. So what we have in the moment is, call it a temporary, call it a dip, right? I thought of it as a temporary dip. Okay, so in my own mind's eye, the stock price is, call it undervalued or overly short-term pessimistic, so it will go back up. Okay, but that's obviously I have to be right about that. So why did I choose to buy an option instead of more shares? Because I guess it's this sequence of when the price collapses quickly and almost like mistakenly, although that's not quite the right word, but I would say the market in a sense misinterprets what happened. Then I have two pieces of the puzzle that I need for a quicker rebound, and then you just get more leverage. So you get more leverage using an option because the volatility has also gone up. Side note, options pay you more when their volatility is higher. Okay. So when I did the first standard deviation calculation, it showed me that would get us back to $6.86. That's still lower than the recent high. So therefore, I'm thinking that's not preposterous. It's not a preposterous event for it to go back under its recent high. So that's step one. And then step two, I use a platform called Option Strat. I looked only at an option that was long dated. So it was a leap. It was a January 15th, 2027 leap. So I'm not dealing with any short-term stuff. In fact, it's a year and a half, 1.6 years for my thesis to play out. And I selected a price target that would show me how much the option would go up if it got to this level of 686, but before it expired. So I thought, what did I use? I think 180 days, like half a year. All I would need is several earnings calls. So it's not even close to the full extent of the option. And when I selected that date and the price target, it tells me how much the option could go up by, because options are sensitive to a bunch of the variables. And it showed me it would be a 90% gain based on a move that was much less than 90%. And so all other things being considered equal, even if I was wrong using that particular 180 days, I would still have much more time left on the option to play out like a long-term investor would. So I thought this is exactly the moment that I want to take advantage of all of these items in sequence. And I felt as confident buying this as if I were buying shares outright. And if I'm right, I'm just going to get a little more juice out of it.
And if you were like, if your thesis played out and you sort of doubled your money as opposed to gaining 30 or so percent, so the extra money you made, potentially then there's like a second decision, you could actually then go and buy EOS stock with that if you felt it was a good long-term hold.
Correct. Yes. Okay. Now, the weird thing this is just for those of you who follow our King of the Jungle portfolio. The only negative to this in my decision was that I was already overweighted in EOS. So I really did not want more EOS shares. I have more than plenty, and I'm just going to let that play out as it will. So when I bought, this option cost me 175 bananas, $1.75 per share that I control. Each contract is worth 100 shares, so $175. And we add $200 to our portfolio every month. So that was almost the entirety of my month's wages, so to speak. I was like, do I really need to control an extra 100 shares of EOS? So I talked myself into it because the setup, I think, was so favorable. Yes, my next decision is if I'm right, I will cash out. I won't hold for the duration. I'm going to cash out at some level. It might be 100%, might be 150, depending on what the news that caused the spike, if I'm right.
On the option, or you're thinking this is like your strategy for your whole EOS position? If it gets to a certain level, you're like, I'm selling everything.
Nope, this is just for the option.
Fine. Yeah. Okay, because that I would challenge, because that kind of goes counter to like the ethos of being an investor.
Correct.
Yeah.
This is just for the option. But remember, in our portfolio challenge, I'm controlling with this option 100 shares. So if it goes up something, I don't know, back to its all-time highs, that's already like, $300, $400. I have other places in my portfolio to redeploy that $400 that I think is a good spot. So it's a little bit of the parlay activity mentality, which I don't know. It's in my toolkit. I feel confident doing it in this particular moment, but I also know there's lots of moving parts. It could not go the way I think. The fact that it's a leap expiring in 27 gives me more confidence that this was the right move now. But I don't know how it will unfold in total because I don't know what other parts of my portfolio will do.
Good. Thanks for sharing your rationale. Let's see how that goes.
And as a follow-up, though, one last thing. I know talking about this live can get confusing with options. There are charts and it's advanced level stuff, let's just say. So if you have a question about some of the other metrics I used or some of the other considerations I had to take in mind, please head over to patreon.com/Wall Street Wildlife, jump on our discussion board, and I'll be happy to answer whatever I can.
Yeah, super. And as a reminder, like one of our Patreon tiers, if you're a jungle cat, we disclose all of our own investment decisions, either, as we're making them or ideally in advance of making them. I'll try and post whatever I'm doing like same day, and then I'll do the trade a bit later in the day. So we're trying to be super transparent on Patreon. I share stuff on X as well, but it's usually like a couple of weeks lag.
And also, this is not financial advice. Do your own research.
Precisely. Well, let me give some not financial advice as well. Cars, I did what turned out to be a bit of a short-term trade, which is quite unusual for me. I bought something in January, and then I found myself selling it in May. So that's like unheard of.
Yeah,
it's overnight. It's pretty much overnight for me. Right? My average holding period is, I think, depending how I measure it, like 3 or 5 years. And I've had stuff I've owned for like 21 years. So anyway, Remitly. Ticker RELY. So they're like I own a bunch of fintech companies like Wise and Adyen, and I used to own Block, like Square and a few others. Never really owned the big banks because I don't really like it's a legacy model, and I think they're going to get they're having their lunch eaten by fintech. But I'm always looking for fintech options. Oh, Nubank, Brazilian neobank, like also one I own today and I'm a fan of. Around the same time as I bought Nubank, I also bought Remitly, and Remitly's niche is remittances, and remittances essentially like an international transfer of money when you're working overseas and you're sending money home, maybe to buy a house back home or to your family or your village or whatever it might be, but you're remitting money back to where you came from. And like, this is probably bad judgment on my part. I believed Mr. Trump, President Trump, when he said publicly back in, whatever it was, November, December, that he was going to support H-1B visas and overseas students. Essentially, like you come and do your, to say, degree at Harvard or somewhere, you get your doctorate. And then there was definitely talk about, and we'll just give these guys like a visa. So we keep we've invested in them, we've trained them, we've given them the qualification. Like these are the best and the brightest. Let's give them the ability to work here and work for our companies and make our companies even better. Like great policy. That makes so much sense. And so I invested in Remitly on the back of that because I thought, wow, going to have like a whole bunch of like wealthy folk being supported and like increasing good immigration into the US. But no, it seems like that's been walked back pretty hard now. Now the Republicans are in office in a couple of ways. Like there's a fairly de minimis tariff on remittances, which will hurt the company, but it's not material. It's like 3% or something. But also a bunch of other actions around like canceling visas, sending students home, like really reviewing overseas workers, like immigrants into the US quite hard. And we've seen a whole bunch of horror stories, some of which are true and some of which almost certainly aren't. But certainly, like we're seeing the Trump playbook, and I probably shouldn't have believed that he was going to be like a staunch supporter of immigration. So I've pulled out of that trade because I think the thesis is fundamentally broken.
I think that even though for you it's a short-term-ish trade, what you're modeling is extremely important. You know clearly what you based it on, and it doesn't seem to be playing out. And I'm sure you're missing a bunch of other variables that might even be in the trade's favor, but it doesn't matter. It doesn't matter. Things changed. You made the call. You're switching. I applaud it.
I like I've started embracing the concept.
I mean, it doesn't have to be more complicated than that in many ways, honestly.
That's it. Yeah, that's exactly what I was about to say. Like that, I've lent into that idea of there's the too complex pile. And if something is just a bit unclear and muddy, like I'm much happier just to dump it on the too complex pile and just walk away from it. Because there's so many uncomplicated, great investment opportunities out there.
I bet you that because of your poker experience, you've practiced folding hands repeatedly. This is what the best poker players do. They just fold even if they have good cards. Probably makes it easier to fold even an investment that you had just invested in. And I bet you a bunch of beginning investors would not be able to make this kind of trade simply because they had already, call it, bought it, and they would justify holding it for longer with about bunch of what ifs and what abouts. So that kind of clear precision of action and thinking is what I want our listeners to really think about rather than the fundamental thesis of that particular company.
Yeah, that's a good point, actually. I think like it is important. You have to be willing to admit that you're wrong and you've made a mistake, or the things haven't gone the way you expected for whatever reason. Maybe you misjudged it, or maybe just the world turned out differently. And you have to own that and say, okay, like that was the wrong decision. Let's go a different path. And if you can't do that, this is when you end up like doubling down on your losers and doubling down again and getting so overexposed to like a broken thesis because you can't admit that you are wrong.
Yeah. And in the poker analogy, you get dealt. I've seen this so many times. You get dealt aces, so you bet big, but then the flop comes out, the three cards on the table, and they're ugly. There's a king, there's a queen, they're not the right color, and the number of beginning poker players that hold on to their aces because it was the best hand before the flop came out, and they cannot psychologically let go of the fact that it is quantitatively no longer the best hand, right? It's it's pure subjective bias towards bias towards the past or something, whatever you can't update.
It's like another version of price anchoring, like you're anchoring on that decision you bought, the price you bought it at, and you're like, well, it's got to come back. So you end up like chasing a loser, which is different to what we talked about with your EOS position. Because if you just looked at it in a vacuum, you could say, okay, Krzysztof is doing the same thing. Like stock went down, he's buying more. But if it's when you do it blindly without thinking and checking your thinking, when you just do it because the price went down, not because the thesis is still robust, maybe even stronger, and you're getting like a better value point and you're taking like a longer view than the average market participant.
Aye.
Alrighty, very good. Well, good to catch up. I think we've done well with your internet connection in deepest, darkest Poland. So we shouldn't count our chickens too hard and probably wrap this up cleanly.
I would not say deepest, darkest Poland. because this country has, but I would say rural, primeval, foresty Poland. Yes, the fact that I have a working internet connection at all is a bit of a miracle.
And listeners, that was essentially the detail of the invitation I got. That was as much detail as I had to plan my itinerary around. So. Alrighty, well, don't get shot by your bear hunting uncle when you go off-piste next week. I hope that's going to be fun, though.
I hope not to. finchat.io/wildlife is where you should go to use finchat.io, which is our fintech platform of choice, where we both go to investigate all the numbers and financial charts.
Are you ready to become a beast of an investor?
Your journey starts here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.